Hello and welcome to Ausbiz on this Monday. I'm Andrew Gagan. Thanks for joining us here for the Global View. I'm Andrew Gagan. Let's take a look at what happened over the weekend. Plenty, it would seem. Now, global equity markets slipped on Friday, while the US dollar gained. It was ahead of President Trump announcing 25% tariffs on Canada and Mexico and an additional 10% on China. News of the trade measures saw Wall Street shares reverse course to finish in negative territory. Energy stocks led the declines, with Chevron shares falling after the bell there, after the company reported fourth quarter earnings below estimates. Exxon also slipping after its quarterly results. In the tech space, Apple initially rose but then fell after forecasting relatively strong sales growth. Among the big tech related names due to report this week are Alphabet and Amazon. Overall, S&P 500 earnings for the quarter are expected to have risen 11.5% year on year. And Canada's main stock index fell as energy and consumer discretionary shares dropped ahead of the start of US trade tariffs. And European shares closed at a record high, led by tech stocks, as earnings from companies such as Novartis and Hexacon overshadowed concerns over the economic recovery there. Well, over the weekend, President Trump implemented tariffs of 25% on Canadian and Mexican imports and 10% on Chinese goods with immediate effect. He also flagged possible tariffs on European goods, as well as some commodities and drugs and semiconductors, saying we're going to be putting tariffs on steel and aluminium and ultimately copper. Copper will take a little longer. When those countries targeted have said they'll respond with countermeasures. Now, in US economic data, consumer spending beat estimates with a 0.7% increase during December, and the core personal consumption expenditures price index rose 0.2% in December, which was in line with forecasts for an annual gain of 2.8%. Meanwhile, Chicago Fed President Austin Goolsbee has said the inflation data was a bit better than expected, and he expects the Fed's policy rate to be a fair bit lower in 12 to 18 months' time. Prior to the tariffs announcement, the yield on the 2-year note rose 3.5 basis points to 4.23%. The 10-year was up almost 6 basis points at 4.57%. And the US dollar gained against most major currencies, while the Canadian dollar weakened. The Mexican peso edged higher following the tariffs announcement, and the Aussie has dropped back to 61.6 US cents. And Bitcoin has taken a tumble off the back of that news over tariffs, and now trading at around $97,500 US dollars. Well, oil prices rose in aftermarket trading on Friday, as President Trump said he expects his administration to decrease proposed tariffs on Canadian oil from 25% to 10% and to impose duties on oil and gas around February 18th. Brent futures for April rising 0.7% at $76 a barrel. And the threat of tariffs on copper saw it fall 0.7%. Iron ore is around $102 US dollars a tonne, and gold rising around 0.33%, surpassing the key $2,800 level for the first time. So, plenty for markets to consider, of course. Let's get across it. Greg Smith joining us from Devon Funds Management. Greg, welcome back. Good to catch up with you again. Of course, it is all about Donald Trump and his tariffs. What's your interpretation, and particularly the market reaction?
Oh, sure. Morning there, Andrew. Obviously, the market's had a pretty good January, this is an interesting way to start a new month. So, looking at us as a bit of a guide, the NZ 50, we're down 1.7%. The big weight on our market is Fisher & Paykel Healthcare, which is around sort of 15-16% of our index. Now, that's down over 7% at the moment. So, very relevant to this whole story. They're our biggest company, our biggest exporter, and they have around about sort of 45% of their manufacturing capacity is in Mexico. So the US is a very important market to them. Obviously investors haven't reacted well to this. The stock has been trading around record highs. The tariffs, they have been flagged. So it'll be interesting to see how obviously America's trading partners respond, but also companies that are caught up in this. So you think the auto sector, you think a variety of sectors. But look, if we look at Fisher & Paykel, they've actually talked previously, and we meet with them regularly about just diverting that capacity. So if you think about it, they could divert some of that Mexican capacity towards Europe. They could have more manufacturing capacity in New Zealand. Obviously, that would come for freight costs, but there is a way to sort of navigate this. And I suppose they've said that FY25 won't be affected. I mean, that makes sense. They've got plenty of inventory there, and it is going to be about FY26, and their gross margin targets is going to be impacted. They're initially sort of hoping to sort of hit these targets in the near term, but they're saying due to tariffs, this could be another 2 to 3 years. So yeah, certainly an impact there, but lots of companies are going to have to navigate this, of course, as our trading partners. And I guess, it remains to be seen. And I guess the big uncertainty is how long these tariffs are going to be in place, how others react. We've already seen Canada come out with some retaliatory tariffs of its own. We're going to be braced for what Mexico and in particular China do as well. So it's a bit of an unknown. Yeah, Trump, of course, did put tariffs through in his first term, and that was about bringing trade partners to the negotiating table. He is a deal maker. He wants to get some concessions. Obviously, it's not just about fentanyl, I don't think. But yeah, it's an uncertainty for markets as we start a new month.
Yeah, it's going to be interesting, particularly coinciding with earnings season too on this side, and probably your side as well, whether there's going to be any adjustment in the language. But of course, there are so many unknowns. We don't know whether or how long these tariffs are going to be imposed for, of course. And not just individual companies, but also commodities, we've heard as well, Greg. So that's going to be a focus for here locally. Yeah. But, when we talk about the likes of, well, maybe more broadly on steel, but certainly copper, zinc, and so on.
Yeah, absolutely. I think there's a commodity impact there, which is interesting given he wants to get commodity prices down. He's talked obviously openly about wanting to get the oil price down, but yeah, the price of things are going to go up for Americans and for a lot of people. And I think it's not just about the immediate. There's a tariff impact which is significant and unprecedented, but things cross borders multiple times as well. So there's going to be more than just sort of the one-off impact. The auto sector is going to be huge, and the estimates it's going to potentially increase the cost of an average car in the US by $3,000. So impact initially a quarter of those 15 million vehicles that are sold in the US each year. But the price of goods are going to go up, and it just seems to be that there's this tilt towards protectionism. But it does seem a big gamble, on Trump's part, that there's going to be some near-term headwinds and pain, basically, for American consumers who are already dealing with pain like a lot of consumers elsewhere, and all about the bigger picture and trying to make America great or greater again. So it's a bit of a roll of the die, but yeah, certainly, as you say, Andrew, it's going to have wide-ranging impacts on some really, really important sectors. And we saw this last time around. Obviously, we were able to navigate that last time around in terms of investors and so on. It was just actually, we had the Apple result on Friday, and I think last time around, Tim Cook's pretty good friend of a friend, but a confidant of Trump, and basically rang up and said, hey, we're not going to be able to shift our capacity from China, and they got an exemption. So, are we going to see those sorts of favours again? I suppose time will tell.
Yeah, of course, it raises the broader spectre of global inflation reigniting, doesn't it? So certainly markets will be on watch for that, and also perhaps brings into question further rate cuts, certainly in the States and maybe locally as well. Just taking a look on the events calendar, economically at least, look, it's certainly busy here. In Australia, more broadly, we've got a read on the manufacturing index out of China today. We've also got, it's all about jobs this week in the States too.
It certainly is. So, we're expecting a relatively healthy read on the jobs front in the US. Obviously, for January and December was quite strong. But you raised an important point as well about what the Fed might do. Obviously, they went on hold. They said they're watching the situation. They now know a bit more about the situation. As you quite rightly say, there's an inflationary impact there. So that might make it a bit more difficult for them to cut rates to the extent that perhaps some were thinking. I mean, we could even have a scenario where they don't cut rates at all again this year. So that's probably not being priced in just yet. I think we're looking at around about a 15% probability at the next meeting. So I think that's something investors might need to brace for in terms of uncertainty there. If we get strong jobs numbers, that's only going to add to that notion. But then, given what's happening, are we going to start to see the employment market affected as the year goes on? We've got a jobs print here as well. That's going to be very, very relevant to the RBNZ. They meet in a few weeks' time. So the NZ unemployment rate's expected to tick up from 4.8 to 5.1%. Our inflation rate has been going down, which is sort of helpful to our central bank cutting rates further. I suppose an interesting notion as well is China gets caught up in the trade war, for one of a better word. Are they going to divert more of their product to other places and not quite dump it, but does that have a deflationary impact? And that's something we've talked about before in the program, about that potentially happening for New Zealand. We see cheaper Chinese goods, and that might help there. So I think that might be a big theme, Andrew. Diversion of output. Talked about that for Fisher & Paykel Healthcare. Do we see that globally, and do we sort of see the cards sort of shuffled a bit in that respect? But otherwise this week, some interesting. Our earnings season doesn't really get going till next week, but certainly some big tech names. We've got Amazon, sort of Alphabet coming out. I think we've got Amazon as well. We've got the car makers. It'll be interesting to see what they say. Toyota and Ford. And obviously, some reporting as well to come through globally. L'Oreal, I think, will be an interesting one, and Novo Nordisk in Europe.
Greg, great to get across what you're seeing moving markets at the moment. Thanks for joining us from Devon Funds. Have a great week.
My pleasure. You too. Bye, Andrew.
So let's look ahead to our open. Looking at a very negative start, as you can see, SPI futures off around 1 1/5%. All of this, well, most of it obviously centred on the reaction to those tariffs that have been announced by Donald Trump over the weekend. We're going to get right across the open in just a couple of minutes' time. Stay with us.